Great.
Yeah.
All right, dude.
Yeah. Cheers.
Cheers, bro.
Oh, yeah.
We need the. We
Troublemaker.
don't need those mics. That's for passing around. Okay.
Chris is the troublemaker
He's great. He's a real CEO.
here. Yeah, right. Yeah, exactly.
Okay, we're on now. Okay, thanks. We're going to go ahead and get started, you guys. Because we've got people waiting on the live stream, and I know that there's still a few folks trickling in for the in-person event, but we want to get going for the folks on the live stream. Just a couple thank yous to get things started. First, I want to thank our landlord here, the Crown Estate, for giving us this lovely space to have this event. And then I'd also just like to thank more broadly the London community of companies and innovators and entrepreneurs that has been so warm and welcoming to us as our firm has recently founded its UK branch just down the street from where we're meeting today in St. James. And I think that thank you probably also goes for Fortress as well. That's also received a very warm welcome for their Mayfair office. And I know that we're grateful and overwhelmed with the amount of opportunity that the entrepreneurs here have provided. And then finally, we want to thank all of you guys for coming in person. Thanks to all the folks on the live stream for tuning in. We're very happy to have you today, and this is kind of our inaugural event for both of us, really, kicking things off here in the UK and learning a little bit about using IP as collateral for debt deals today. So with those thank yous, I guess I just want to start with some introductions. You have my papers.
Okay. All right.
Oh, no, you don't. I have mine. Here we go. Can't have that. So I will let you introduce yourself.
That'd be great.
Chris, but then I have a lot of notes on you because we tend to be pretty modest.
All right.
I'll go ahead and start with myself. I'm Keegan Caldwell. I'm the founder of CaldwellLaw.com. We have been the last 4 years in a row the fastest growing intellectual property law firm in the United States. We've recently opened in May. We opened an office here in St. James, just down the block. We also have offices in Boston, the United States, and in Los Angeles. And we're recently adding a corporate practice here to help our continually growing technology clients be able to assist them with M&A and assist them through funding rounds and the myriad of things that are kind of entangled with our IP practice that we've created over the years. Essentially, we want to be a go-to for entrepreneurs and technology companies alike, tech companies, biotech companies, where we can assist to create value both on the corporate side and on the IP side. Chris, do you want to give a brief introduction of yourself?
Absolutely.
Sure.
Thanks, Keegan. And on that note, I want to thank the Caldwell firm. Thanks for the invite. I very much appreciate it. Always good to be on this side of the pond, right? And thanks for everybody coming this afternoon. I know you could maybe be at a pub across the street or at work or at a pub.
So drinks will be provided after for those that stay the entire time.
Good announcement. My name's Chris Seidl. Hi, everybody. Nice to meet you. I'm a managing director at Fortress Investment Group. A little bit about me. I spent about 21 years at a law firm doing mostly patent litigation, but also some commercial litigation. But I was at a law firm that did all litigation. We didn't do any transactional. We didn't do any of the patent prosecution side. But I spent about 98% of my time doing patent litigation. The first half of my career at the law firm is called Robbins Kaplan in Minnesota in the United States. I did primarily defense work for big corporations. My big clients were GE Healthcare and Medtronic. You guys may have heard of them. They're big med device companies based in the States, but also are worldwide. So like I said, I spent a lot of time defending companies against patent infringement cases and learned a lot about what corporations do well, and what corporations don't do well on the intellectual property side. And it kind of has fed into a lot of what I do today, which we'll be talking about. The second half of my career, for about 10 years, I represented Fortress as outside counsel. I had the good fortune of meeting the CEO. We became very good friends, and ended up representing them in some litigation of their portfolio companies, as well as doing a lot of their due diligence on some of the IP-backed loan deals that we're going to talk about today. So just real quickly, I'll give a little background of Fortress, but I'll probably sprinkle in some additional tidbits as we go. But so Fortress Investment Group is a large asset manager. Some people call us a hedge fund. I don't think we're really a hedge fund. Some people call us a private equity group. We do some private equity, but we are basically a large financier. Fortress has about $45 billion US under management worldwide, and about 9,000 clients worldwide. We have offices all around the world, including in Mayfair just down the street. So I visit there quite often. However, that Mayfair office, at least not yet, doesn't have the IP group, which I'm a part of. So I'm a part of the IP finance group at Fortress. It's I guess you would call it a subsidiary of Fortress Investment Group. And we think of ourselves as IP investors. And we think of ourselves as basically a one-stop shop for anything and everything relating to financing and intellectual property, and in particular, patents. So we've got essentially 3 lines of business that we work in. One is IP-backed lending, which we're going to talk about today. 2 is a private equity, we put in quotes, private equity space where we go out and acquire corporations, or we'll acquire intellectual property, acquire patent portfolios. And then we also do litigation finance as well. I've been at Fortress about a year and a half now. I left the dark side, as they say, and maybe I went to the darker side, as they say, of finance. That's a joke. So I've been there about a year and a half, and happy to be here. I really appreciate it.
Good. Well, you pretty much covered everything, except for
Good.
some of the nice adjectives that
People call me?
people use. Yeah, exactly. Not the bad ones that also people call you. But Chris, I'm honored to do this with you today because you have a handful of years more experience in private practice on the IP side, really, in the weeds of doing patent litigation, and you have an excellent track record of success. You have things that have been upheld by the Supreme Court in the United States,
True.
and all sorts of nice things that people have said about you: superior client service, a trailblazer, lawyer of the year for patent litigation, and a magician in monetizing patent portfolios. And I think that all of those things have kind of led to this this new path and new opportunities because it's so informed by your background.
Yeah,
And
appreciate that.
I am excited to learn a little bit more from you, and excited to continue to expand my depth of knowledge about what is available for clients of ours, of our firms, and for those that we haven't met yet.
Great.
So
Thanks. By the way, I have my smoking jacket on. You don't have your smoking jacket.
yeah, I know. I forgot it. Exactly.
It's supposed to be a fireside chat.
There's several silk ones that you can get on German Street right out here. So I think that you touched on a handful of things in your introduction, and mainly talking about how the IP group is separate from some of the other things that are there at Fortress. I think that just some historical context is useful to. I think it's less common for folks to do IP-backed debt deals in the UK or Europe, for that matter. It does happen, but it's just less common. So I think that kind of showing some of the evolution of how things have arrived at where they're at now. Did all of this start with? I guess maybe we should talk about first, what do we mean exactly by IP-backed funding?
Sure. Do you want me to go into the history
Let's start with that because I think a definition leads in nicely.
Sure. I guess people have different definitions. I guess I would say IP-backed lending simply is lending growth capital to companies that need capital, where the IP, and we say IP up here a lot. I think we probably are just referring to patents.
We mean patents.
Patents,
Yes.
yeah. Where patents are the collateral to the loan. And that's really kind of the basics, right? Yeah.
And so now we'll talk a little bit about historical context,
Sure.
right? So the way that we were just talking about this at lunch, but like my personal view of Fortress is that they were the kind of
The OG.
largest, yeah, exactly, OG of getting into the litigation funding space, and that was a large bank that was doing IP deals, and which was just less common at that point. Using it as a monetizable asset that you would place a number on, rather than one that was more of a soft number, right? It started to become more of a hard number on a balance sheet.
Yep.
So maybe you can speak to where you think you saw things begin, or what were the early days of this? Did it start with litigation finance, or?
Yeah, sure. So the question about whether it started with litigation finance, I actually am not sure. I think that's right.
Yeah.
You might know more than I do about that, or others in the room, and feel free to chime in. But I can talk about my experience and Fortress's experience on where we started in the IP-backed lending space. And it really started with our CEO. His name is Eran Zur. He was a co-founder of RPX. I don't know if people know what RPX is, but in the States, RPX is known as a big defensive patent aggregator. So basically, they started in, I think, 2008. And the thesis of RPX was, on the defensive side, they including Eran Zur, believed that patents had value, of course, and when corporations were sued for infringement, that was a real trouble for those corporations because there was big damages at stake. And so what RPX did was they said, look, we're going to buy up these patents because they have value. They have, offensive value for the people who are asserting the patents. There's also some defensive value to what RPX does because they can aggregate those patents, put them all in a pool, basically, and whoever signs up to RPX's membership basically gets a license and doesn't get sued by the people that are with vis-a-vis those patents. That's kind of the rough way of describing RPX.
The other folks that have joined the pool.
The other companies that have joined
Yeah.
the pool, right? Eran did that for about 3 or 4 years, and then he had the idea of starting Fortress IP Finance. And so Fortress IP Finance is really kind of the brainchild of the CEO, Eran Zur. He went to Fortress Investment Group, who at the time had been around a long time, had a lot of money, had a lot of contacts, a lot of offices around the world, and was very well known as an alternative asset manager, right? So Fortress, Big Fortress as we call it, invests in alternative assets like funky stuff, right? Wineries and liquor stores. I actually think we own a liquor store somewhere down the block here in the UK. Hospitality, hotels, rail, train, things like that. And Eran said, okay, well, I'm going to join forces with Fortress because they're an alternative asset manager. And in some sense, patents are an alternative asset. And actually what we now say within our group is, and this is where this is kind of like the thing that gets me most excited, because this is kind of our core belief within Fortress, is that a patent is an asset per se. And that's kind of the thing we say a lot, is a patent is an asset per se, which means, right, it sounds simple, but a lot of people don't really talk about a patent that way. A patent is an asset just like a building, like a machine, like anything a corporation owns. And so that means it can be sold, it can be rented, it can be licensed, and it can be collateralized. And so he had the idea that, hey, let's start providing these loans to companies that need backing, where they can't already or get capital elsewhere with banks that traditionally have not been able to value IP, and that's kind of where it started. That's kind of our story. I think maybe others have other stories. Maybe there's some other folks in this industry. I know maybe Aon is in the room. Aon folks, there you go. Yeah. But there's lots of other companies that do this. That's kind of where we started. Yeah.
I mean, thinking of a patent as an asset, I think that was definitely kind of a turning point for folks. And I'm gonna mess up this statistic, and Mona's gonna be mad at me for doing our marketing director. But I know I've seen some statistics in the last couple of years where it was like the S&P 500 in 1974 was made up of 84% of tangible assets, where then that had completely flipped by 2018 or 2020 to it being 84% of intangible assets. And so, really suggesting that if you want to be one of the largest companies in the world, that you need to have a significant investment in your intellectual property.
Yep.
And then, and we're regularly speaking with clients. We work with a number of startups and late-stage companies, or companies that have IPO'd as well, where their intellectual property continues to be their greatest asset, aside from their people, usually.
Right.
And so I think the question would become, how is it that how can these assets be leveraged for businesses, or be leveraged for deals? And you've seen that in your personal practice with litigation finance. And then we've also seen that as well with the onset of being able to do IP-backed debt deals. Now, one thing that we didn't talk about with the historical context was with IP-backed debt deals, those started kind of very industry specific, I think. But that has maybe evolved over time. Can you tell us a little bit about maybe where things started and what it looks like now? Are there only certain areas that get funded, or is it pretty broad at this point?
Yeah, you mean in terms of
technology
and industry?
Yeah, the type of patents that a company might hold, or what sort of industry that they're in.
Yeah, I think I mean, I think it's fair to say that in the early days of IP-backed lending, and Fortress started in 2013, and it probably dates even maybe before that a little bit. But a lot of the lending was happening in the telecom space because of standards-based IP assets were kind of easier, I put that in quotes, easier to get your arms wrapped around in terms of what is claimed, what the product's involved, and who the potential users of that technology, or maybe the infringers of that technology were, because there were standards. And you could look at the standard and determine, okay, well, essentially, is this an important standard or not? Is it an essential standard, or is it not essential?
By determining how much of the market would need to use that particular standard that was in place.
Exactly.
Right. Can you maybe just give a couple? I'll give a couple examples of standards, because maybe not everyone is familiar with what that is. But there'll be government standards, maybe like on MP3 or MP4, or JPEG, or MPLA, or a number of different like video compression standards have been particularly lucrative pools in the past.
Right. Wi-Fi standards, I think, are the ones
standards,
that people think of the most.
Yeah, sure.
Who could live without a Wi-Fi standard? Probably no one these days, right? And no one really thinks about it. But the evolution of the Wi-Fi standard has kind of, and essentially fueled our ability to work in a coffee shop. Right.
And the government
and work remotely, right?
Kind of sets the metrics of how that particular technology can be utilized, and then the early folks will have probably gotten some predictive IP, or some predictive IP kind of after the fact as well. And then that is when folks will pool these assets into something. So for folks that are not a patent attorney in the room, that's probably useful context for those folks.
Yeah, you nailed it.
That's good. I got something right. So do you think that? I want to pull on that thread a little bit. This is not a question that we wrote down, but I think it's an important one. What is the? So it started with telecom. Then where has it led now?
So I think the answer is that the sky's the limit. I think any industry is kind of ripe for IP-backed lending, really. We've seen deals in our deal flow involving not just telecom, but pharma, med device for sure, chips, semi for sure. But I think kind of anyone and everyone is kind of open to this type of funding, because I think as the space has evolved, the expertise has gotten greater. Our group in particular, we pride ourselves on our IP expertise. And when we talk to potential partners or clients, we say, look, we're built of IP experts, basically. We've got a lot of people who are in big law firms, a lot of people who are former Wall Street people in New York that worked in intellectual property as well. And so we know IP, and we know how to basically roll up your sleeves and look at a patent and determine whether it's valuable, not valuable, whether it's being used or not used. So I would say, that it's an open field right now.
Sure.
Yeah.
And that's a good kind of point to segue into talking about if we feel like this is kind of the early days of this as well. So we've given some historical context, maybe contemplating how things were 20 years ago.
Yeah.
But they have evolved maybe slowly.
Yep.
But where is it that you think that we are now in the context? Do you think that this is still pretty much the earlier days of people being able to utilize this asset? It would seem to me that as more and more data gets collected on publicly available patent sales or royalty rate information on patents, that then you would have more solid numbers from which to do deals in a number of technology spaces, really kind of, or agnostic of the technology space. It would seem if you had the data to back that up.
Yep. I guess my answer to that, I think, is maybe 3 parts, if that's okay. So one, I guess first I would say it's not really the early days, because I think there are lots of companies out there, lots of options for companies to talk to IP-backed lenders. Thankfully, I think it's a really great thing for the economy in the U.S. and in the U.K. And worldwide. And I think there's lots of options out there, and there didn't used to be. And that tells you something, I think, right? Because we're not a charity, right? So we are in this business, and I think we would not be in the business if it wasn't something that was useful to our partners and our clients. Number 2, I think I would say, yes, it's early days because of what you've mentioned in terms of analytics and data. I think we're still in the early days of being able to have a real methodology. Of course, we all have methodologies in terms of valuing patents, but in terms of the AI, machine learning, things like that, I think we're still in the early days of that, for sure. So go ahead. Yeah.
So just to firm that up a little bit, maybe we're not in the early days because the market has gotten considerably more competitive from where it once was.
Yeah.
There's a lot more market entrants and people that provide different levels of funding and different areas of service that just didn't exist before. Or maybe in the first market entrants to do this type of thing were more device component focused or standards focused. And now with the number of different funders that have entered into this, I think it is the earlier days of providing opportunities for companies that are outside of those traditionally funded IP-backed debt deals.
For sure. And that's, I guess I would kind of use that as a segue to make my third point of, I think we're kind of still in an evolutionary stage of IP-backed lending because of the industry focus. We've seen a lot of deals come through on the pharma side and med device side, as I said, that probably wasn't as popular before. And in addition to that, a lot of our deal flow that we're seeing is not just IP-backed debt facilities that we're offering, but also on the equity side, right? So we are able to, I think, financiers like ourselves are able to say, okay, not only can we offer a loan to the company, we can maybe offer our expertise to the company in an equity situation where we can put somebody on the board and allow someone from our organization to help the company build their patent portfolio and bring it to the next stage. I think that's to me, I think that's kind of like the next step in IP-backed lending is broadening it out to the equity deals where people can bring their skills to bear.
And providing strategic counsel as to what's going to make this the most patent as an asset per se
Right.
value.
Exactly.
Yeah.
Yeah.
Okay.
Yeah.
Got it.
Yeah.
There are probably going to be a number of questions from the audience.
Can I just say something about value? Because I think it's important to touch on
Please.
this.
Yeah.
We keep, I brought up IP as an asset per se, or patents as an asset per se. I don't think that's a very controversial concept, although, like I said, I don't think it's talked about a lot in boardrooms, or not as much as it should be, at least. Thankfully, I think in the in the IP community, in the tech community, I think it's pretty well established that a patent is an asset per se. But what's the value of that patent? I think that's kind of where the question lies, right? Everybody kind of believes that it is an asset, right? Duh, that's simple. Where I think companies like Fortress and others come in is, okay, what does that mean? What is the value of that, of that patent?
Yep.
And it can be wide ranging. And by the way, I'll just also say, I don't know if we're going to go there or not, but our group, at least, we don't, when we're doing an IP-backed lending deal, we're not just valuing the patent. That's not the only thing that's being underwritten. We're also underwriting the business. And I think that's a really important thing to be aware of is, we're not just coming in and going, okay, well, you've got 10 patents, those are worth $100 million. Here's, $10 million, $30 million, or whatever. At the end of the day, we're like any other bank, basically, that the company needs to be able to service the loan. So we're also underwriting the business. So I think that's a long way. I'm sorry, I'm long-winded. That's the long way of saying it's still important to know that IP, patents, and the business kind of go hand in hand. I think they've really got to be gelled together in a lot of different ways we can talk about. But the IP strategy has to mesh with the business strategy, and that's what we're looking for. So.
Maybe we can go down that path. That's an unplanned path, but I like it because it comes up for us all the time.
Yeah.
So one of the things that we're touching on is how is it that you're going to map what it is that you have to certain products, and be able to kind of blend those two things together. But I would say one of the larger headaches is that where people see great press about IP-backed lending and, IP as an asset. I love that you touched on that, and that there's it's a great marketing thing to throw around, but, IP as an asset, kind of like a cryptocurrency, can be completely valueless,
right,
or worth a lot, right?
True.
Depending on how it's approached, and strategy really is everything.
Yep.
But getting back to what I was saying, though, is that you guys are evaluating companies also. You can't just have,
that's right,
most of the time, like, let's just say all the time, because it's easier to do that for people to understand. Everyone thinks they're that 0.1%, right, when I hedge a bit here. But it generally won't happen for you to get these deals unless there's some sort of balance sheet that will support you being able to repay the debt.
Absolutely.
Right?
Correct.
You can't do a debt deal. Maybe you have a patent portfolio worth $20 billion, but if there's no path to being able to pay that back, it's going to be very hard to justify that. And now I'm just a lowly attorney and law firm founder, but if people don't allow me to give out money. But it makes sense to me. It's an intuitive to think that that's what you'd want to see as well, right? Like you can't just, obviously there would be so many defaults if that was the only way that we did it. Because you can have very valuable IP also. I think that's the other point, because I have several clients that have very valuable IP, but from a company maturation point, they're just not there to be able to get the dollars that they'd like to extract out of that.
Right.
It's not that they won't get there, but sometimes we want to take advantage of that too early. And it's important to explore, I think, many different funding options that there are for people, and that there's probably a right time to press the button on IP-backed debt, and when you get there, you'll know it.
Absolutely. I don't know if you want me to jump in on that.
You can. No, I just think it comes up so much that it's important to discuss a little bit.
Yeah, I think it's important, and I'll just touch on this for maybe a second here, but for our organization, it's different for others, but we get approached by startups a lot, and what a startup is, it kind of varies based on who you ask, right? But what we think of startups are companies that just the revenue doesn't support the loan just yet. Right?
Yeah.
They may have the patents, they may not. But I do think it's a really important, and we can talk about this a lot. I think it's really important for startups to build their IP portfolios and really have that as part of their strategy. But what we see a lot of is, hey, look, we've got 25 patents, but we've got 0 revenue. And I think that's tough for IP-backed lenders, I think, to do deals with. So it's got to be, it's kind of a sliding scale, right? A lot of the deals we see it'll be when we go to investment committee, we have a debate, right? And this all really comes down to this question of value. What's going to be the return? What's the value of the IP? What's the value of the business? And so, as kind of you see this curve, and sometimes the companies will have 100 patents that cover groundbreaking technology that is either being used or will inevitably be used by people in the industry, but they have very little revenue. But if we think that technology and those patents are being used or inevitably going to be used, then we'll take a harder look at it, even if there's less revenue. The easier one for us, right, obviously, is when there's lots of revenue and they can support the loan. It's kind of a no-brainer on the business side for underwriting. But we still really require that they have the IP that back that business both, I think, from our perspective, there needs to be defensive value and offensive value. That's what we look for. The defensive value is, does it cover the products? Does it cover the business? Is it going to be a moat? Is it going to protect that business in the draconian situation? And then also an offensive value, where are there other people infringing those patents? And are they infringing the patents where those patents are covering the product of the company? Or even, there might be some gravy there where there are some infringers out there that are infringing patents that aren't really even core to that company, and that can be good as well.
Right.
Anyway, I went on. Sorry.
Yeah. No. I mean, that's an excellent point, and I just will. I think the traditional focus of working with a patent prosecution firm is thinking about mapping your inventor or company comes to patent prosecutor. They say, hey, I've got this great new technology. Can you see if you can help me get a patent on it? They say, okay, sure. Let me go see what the patent office says. Yep. Patent office says no, because they always say no. Then we argue with them, and then eventually, usually, maybe they give a yes. But it's generally directed towards products that folks have or that maybe are on the roadmap. Right. But without, I would say that the majority of the time that's how it is, and then less so thinking about what are the assets that are going to have the most value in the market. Yep. Where are the other market competitors, heading, or where is the market itself heading, and how can we create some predictive IP that not only captures the things that we're going to do in the future, but that casts a broad enough net where companies will have the ability to decide if they want to control market entrance as they enter in, and they can utilize their IP to stop them from entering or to help them make them have to pay, right?
The way we think of that is when the ideal situation when we see deals like this, and what Keegan is talking about, and for the business folks, the companies out there, we call that kind of a heads we win, tails we win, right? That's our ideal situation, and what that means is we're providing capital to a company. It's growth capital. The use of those proceeds are going to grow the company. It's going to grow their products. It's going to grow their revenue. Everybody wins, right? And our debt is going to be serviced. We're very, very happy with that, and everybody walks away happy, right? And we win, and it's great. In the other scenario, somebody else in the marketplace wins, and that technology is, some other company, some other competitor does better than our partner. And in that situation, when we are valuing the IP, the ideal situation is the company that we're partnering with owns the IP that other people are using. And so again, that's a win-win scenario because we can then talk to the company and say, hey, somebody else is using your technology and you might have to go after them, or they might have to sign up a license, and we get the license fee instead of maybe the product revenue.
Yep. And I think a lot of times favorable, it's not just there can be sometimes people think of enforcing patents as being this generally negative sort of thing, but I think
Right.
it has a lot of positive business value.
Right.
The point of getting a patent was having the ability to exclude others and the liability that it creates for others, right?
Right.
While protecting something that it is that you made and helping to advance other innovation in that
Exactly.
in that particular field,
Yeah.
right?
You're the
But,
litigator. I'm not a litigator anymore.
You like how I'm talking,
Right.
I know I can tell. But it doesn't necessarily have to be this negative thing. I think it should be. This is where the value of it as an asset comes in, and where the value of what we were just talking about comes in. It's not just about mapping it to the product.
Yeah.
It's about getting as much value out of that spend as you can. So taking it from essentially where if it was only mapped to the product, maybe you have something that's worth, £5 or something like that. It'd be hopefully worth more than that.
Right.
Where if you have it mapped to the product and something that covers maybe where the industry is headed as well,
Absolutely.
then you have
Yeah.
something that could be worth 10x that.
Absolutely.
And
yeah.
in that you can use that for strategic M&A, you can use it for licensing, or for a myriad of other purposes for driving up the value on exits.
Right.
All of which can be positive,
Right.
and that are not what we're talking about today.
Right.
So back to litigation funding.
You're going to go there?
Well,
I was going to say,
I do want to
you're
talk.
preaching litigation fortress. We don't have anything to do with litigation. Just kidding. Yeah. Go ahead.
No, I'm just teasing, actually. So let's talk real quick about what people are generally most interested in. How does this happen? What does make a right deal then? We've talked a lot about things that, or at least a little bit about things that don't work that great.
Right.
And some things that we need to have. You need to have some sort of revenue or something like that. But there must be like a threshold number of patents that you want to have, or maybe even the way that those are structured that you want folks to have as well. Like
Yeah.
I can't imagine a scenario where I bring a company to Fortress that has 3 patents or something like that.
Right.
And even if they were 3 separate families, where that's going to get them much traction.
Right. True. You want me to jump in?
Please,
Yeah, I think that's right. I mean, I don't know if we have necessarily a hard number that we will say yes or no to. But yeah, 3 would be probably too low. Generally speaking, and these are all generalities because like I said, it's a lot of times it's a sliding scale, and a lot of what we do really at the end of the day is risk assessment, right? So we're analyzing the risk of that loan. The risk, I think, probably goes down the more patents you have, generally speaking, right? So for us at least, we will look at, generally speaking, it's based 25 patents or more. We like to see in the hundreds would be fantastic, but anything under 25 is a tough deal. I think.
I didn't pay him to say that.
Right. So keep hiring your patent lawyer.
Exactly.
I think maybe the exception to that is in the pharma space.
Right.
If you, as people know, and I'm not a pharma expert, but I've dabbled in it. I know enough to be dangerous. And I think if you've got that one patent in pharma, you corner the market, right? And that's the way. Maybe you know more than this than I do. I think
that certainly leads to a good question.
Yeah,
though,
yeah.
is that let's say that you are a pharma company,
Yeah.
right? And they approach Fortress to do a deal, and they filed 1 or 2 patents in whatever jurisdiction, right? Maybe they file in the UK, and then they go file in, typically what happens is you'll file in wherever your home jurisdiction is,
Right.
and then you'll proliferate that same filing throughout several jurisdictions in the world, right?
Yep.
The risk there, I'd imagine, for a Fortress is that if you invalidate
Right.
the parent application, then there's some inherent risk of validation of some of the others as well.
Absolutely. Yeah.
And it can deteriorate, kind of fall like dominoes.
Yeah.
Are those sort of deals? Do you do biotech deals knowing that risk?
Maybe. It depends. I get
The Aon guy's smiling.
I think the answer is we'd like to see more than 1 patent. It's like there's got to be.
Yeah.
there's got to be
More than one family.
More than one family. There's got to be applications. And by the way, one of the this is maybe just a side note, but this is I think the patent lawyers in the room know this, but for the company and business folks in the room, for underwriting for us on any type of deal, whether it be private equity or loans or litigation finance, keep your applications open. I know it might be a little more expensive and you got to pay this guy, but it's
money well spent.
It's
how you create the most value out of the asset, right? The
It's
problem for me is when people close those and then we go do an exit or something like that and they go, oh, why don't we get the value that we've been talking about?
Right.
Like, because you close the families, right? There's no opportunity to continue to file continuation applications after that to capture potential infringers.
Yeah.
And
that's one way of saying, you asked the question about how many patents. I think for us, one of the very first questions we ever ask is, are the applications open?
Yes.
We're always going to ask that within the first 5 minutes, right? And if they are open, that's great. Even if you've got a smaller portfolio, you can build it based on those open applications. It's really valuable for a lender.
And you can keep the original filing date alive on some of your most important technologies.
Exactly.
Which is important. It does cost a little bit more, but the upside is, generally multiples of that.
Yep.
All right. Well, I see. So we've been talking too much. We're running out a little bit of time. So we've talked about pharma. We've talked about how folks need to have revenue, some sort of revenue.
Yep.
I'm sure that there's some rare scenario where there's like a non-revenue deal. I know that these happen because I've been a party to things like this, but it's very rare. I don't even like to say it because someone's going to come pre-revenue and they're going to get rejected immediately. Yeah.
Right. Yeah. Post-revenue.
That's the easy way.
Post-revenue.
Okay, exactly. Yeah. But then, do they need to be EBITDA positive? So you can have revenue, but do they need to be EBITDA positive?
Not necessarily.
Not necessarily.
Yeah.
Okay.
Yeah.
And so too early is really just no revenue, essentially.
No revenue or no signs that generally we
no LOIs from major players or something like that.
Right. Again, like I said, it's kind of a risk analysis, and what we'll look at is your revenue over the last 5 years, profitability, of course, and then your stream, your potential, right? Do you have kind of contracts in the hopper that are going to take off next year or the year after that are kind of foreseeable in the future that are going to be able to support the loan?
Okay. What type of money are we talking about? How much money? How much money can I get?
Our check size is typically between 15 to 30 on the loan deals. Okay. And on the private equity side, I know we're not talking about equity, but we will go anywhere from typically 20 million. This is upfront cash that we'll pay 20 million to 50-ish million. We can go probably larger than that if the ROI suggests it, but that's our kind of our wheelhouse.
And this Fortress is interested in blending those two types of tools, like the IP debt and equity piece.
Sure.
Is that the only way that they'll do it, or is it the preferred method?
To blend them?
Yeah.
No, we do straight private equity deals. Like I said, when we'll acquire a company, and we're kind of going down a little bit of a rabbit hole. But on the private equity side, I would say, the way we look at it is sometimes, unfortunately, no matter how much money you give a company, that it's just not going to work out, right? And so that's when we will come in and we'll say, okay, well, we can help you still. We can help the founders. We can help the shareholders. We can help the stakeholders by writing a check. And when we do that, we are valuing the IP again. But that's more on an offensive basis. Then we go out and monetize those patents, and the shareholders get paid that way.
Okay.
Yeah. Are we running out of time?
No, we have a few questions. I think we're okay on time.
Yeah.
What can we use the money for? Can you buy private jets with this money? What can companies do with this? Okay.
The sources and uses are for growth. It's for growth of the business, right? It's building facilities, building product, developing R&D.
Can you use it for litigation?
And So for us, it might be different for others, but we look at it as.
That's why I'm asking.
Yeah,
Yeah.
and that's kind of where we will do a hybrid deal in that situation where we'll do a loan plus litigation funding.
Sure.
So we
Yeah.
kind of look at it as two separate uses per se, basically of funds, and it'll be two buckets of money. Right? Yeah.
Yeah. Because I know that there are others that are averse to litigation being happening with the portfolios, which to me, I understand the reasons why, but it also seems counterintuitive to me when the whole value if the value proposition is actually the IP. I don't know.
Yeah, we see a lot of companies that are in growth stage, and because they're in growth stage, they're a mature company that has a robust patent portfolio, and people are infringing their patents.
It's ready to use.
And they recognize that. So we're able to, they can get growth capital and also funding for litigation for enforcement.
Sure. When you do these IP-backed debt deals, who owns the IP? Does it go into some sort of technology escrow, or like, how does that work?
Yeah, so I think on the IP-backed debt deals, I think that's probably one of the two most attractive pieces of these types of deals for companies is that the company maintains the patents, keeps the patents, controls the patents. Certainly, we're there and we're ready, willing, and able to provide advice, thoughts, help. But the company controls the patents. Also, the second kind of ideal piece for the company is it's less dilutive for the shareholders.
Where are you seeing the biggest? Well, I'm going to do this question really quick, and then I want to talk about some EU, UK specific things,
Okay.
just so we can round out. What areas of industry are you seeing the biggest deal flow today? Has that changed from maybe where Fortress was at 10, 12 years ago?
Right. I would say it's still tech, right? Kind of the semi telecom space is kind of where we sit, but that might be, the reason I hesitate is because our deal flow, we probably have built up an expertise in those areas, so we probably see that more often because of reputation and the contacts that we have. But certainly we are now trying to look for deals in medtech. Is now a growing area, I think, and certainly an open area for IP-backed lending. And then this maybe we'll just throw up a softball for you. Our fund really kind of originated and started in North America. In terms of expansion, we are definitely looking to expand in the UK and in Europe, for sure.
Okay. I think many would argue that in order to be competitive in the US or EU market, that you must have a patent portfolio. What are your thoughts on being a competitive company? Maybe you're a UK startup that wants to enter, the US market.
Yeah.
I think that there's a difference in the sort of the way that we would create value for an asset in the UK versus the way that we would create value for an asset in the US. Not much different, but there's some, I think there's some, just a little bit, I guess what I'm saying is that I think that there's probably considerably more value in the EU and the US than if you were to only just hold patents here. But if you want to enter those markets and be competitive,
Right.
do you think it's necessary or advised that folks develop portfolios there?
Well, I think maybe the short way of answering that is we certainly are more excited when we see companies that have a broad portfolio geographically. And that's for obvious reasons for, number one, enforcement, but also market share. It tells us that the company is entering into a market that is going to grow and is doing it in a responsible way. And I think patenting is probably the first step in that, right? I think that's kind of one of the original steps in trying to figure out freedom to operate. Where you can sell product is looking at your intellectual property portfolio and figuring out where it's open.
Do you expect patents and patent-owning companies from EU, UK to be able to leverage their IP as U.S. companies have done? And do you think that's, this kind of ties with what we were just talking about?
Yeah.
I guess,
Yeah.
Aside from just like entering those markets, is there value in folks considering entering those jurisdictions for IP value creation from a funder perspective?
And are you saying, are you talking litigation now or not litigation? No,
I'm talking,
Yeah.
I could be talking about litigation.
Yeah.
I'm just more broadly talking about treating it as an asset and,
Yeah.
and being able to, if you're a startup and you're saying, if you're just giving general advice to a startup,
Yeah.
you're saying, okay, UK startup XYZ,
Yep.
yes, you should, begin to develop a patent portfolio. You don't need to scorch the earth, maybe depending on whatever industry you're in, but it's going to add some sort of, value for you to chip away at this over time.
Right.
What is the what is the value for that company to contemplate? Like maybe they don't have plans to enter a U.S. market, but is there value, for them to enter the U.S. jurisdiction with patent filings?
Yeah. Here's how I would answer that, Keegan, is one, I've spent a bit of time here in the UK talking to folks, and I think the appetite for alternative or innovative type financing is definitely here, and people are talking about it. It may not be to the level of other places, but I guess what I would say is if you're a UK-based company, number one, building your patent portfolio is obviously, again, it provides your defensive value, it provides your offensive value, but it also opens up your options for financing. And the proof is in the pudding for that. I mean, there are folks like Fortress and Aon and others who are there to provide capital help for companies like you. And I think if you're not building your patent portfolio, you're probably these days limiting your options in the UK. I don't know if that answers your question, but that's kind of how I look at it.
Okay.
Yeah.
That's very helpful. I think it's time to maybe take some questions from the live stream. And then we'll also take any questions that the audience has to kind of try to intermingle these so we don't neglect one group. Here, thanks. Don't be afraid to get on camera, Mona. All right. Well, there was just some little chit chat in here before the questions.
Are they making fun of my hair?
Yeah, that's the main comment there. Everyone seems to be pretty offended by that. Are there any specific markers of a business you are looking for when you're doing these deals? For example, do I need revenue? Okay, we've covered that. This question is coming from Jeff Tyler. Do my patents need to directly cover my product, or do you also assign value to predictive patenting? So we've covered this a little bit,
Yeah.
but maybe helping maybe give a bit more information so you can kind of discern how Fortress would look at something like that.
Sure.
Like maybe if you didn't have anything that was covering your product, but was all predictive, but there was great value there,
Yeah, I think that kind of, if that would be the case, I think that would kind of fall into the more speculative category of investing. Of course, it kind of depends on what industry you're talking about, but if you're only doing predictive patenting for the future, it makes it a little tougher. But kind of the bottom line of what we look for is on the patent side, set aside the business, and I think it's a good idea to be having patent protection over your products, just full stop, right? What we look for is does the portfolio cover technology that's currently being used or inevitably will be used in the future? And that's kind of obviously a judgment call and a risk assessment about what does inevitably really mean. But I think that's kind of where I think folks like us, we've got some expertise in-house that know how to analyze those things.
Does the timing of patenting impact value? For example, a company that engages in sustained patenting activity over time versus a company that just starts filing patents between financing rounds?
I don't know. What do you think about that?
I think that everything, the way that I look at it is everything is kind of a case-by-case basis. It depends on the type of business that you're in,
Yeah.
right?
Yeah.
Now, if you were, for instance, I mean, it's always better to put a stake in the ground, right? So that's generally always going to be my advice. Like if you can get some sort of stake in the ground, just as even just a minimal form of protection in the beginning, you know, for, let's say that you're like a SaaS company, but it's like an app that doesn't have, you know, big, you know, sales, like the product doesn't cost a lot of money, and so you need to have like serious market penetration in order for it to, you know, realize value.
Right.
Then generally would want to wait and not just wait. You know, my advice would be to wait and make sure that we're beginning to get some form of traction before we begin to invest heavily in a portfolio.
Right.
But for lots of other, you know, lots of things, depending on what it is, whether it's, you know, any type of manufacturing, any type of equipment, medical devices, you know, pharmaceuticals, you know, device components, whatever that is, anything related to any of those things, generally you need to put some stakes in the ground. Or we have a number of clients that work in aerospace or defense technologies, and many of them need to get going quickly and to make a significant investment in their intellectual property portfolio to protect that, as it's usually a nascent technology. Lots of people are dumping money into the industry. There's other market competitors, and one place that they can create a strategic advantage is by having that intellectual property portfolio to possibly use for strategic M&A, or to use for licensing, or to use for debt in between funding rounds, right?
Agreed.
And so
Agreed.
I think that my experience has been, personally, with this, is that it is a case-by-case basis. The people that have a good plan is what matters to me. And I think that one thing that's offensive to people sometimes, and to inventors, when we'll have a conversation, is lots of times the last thing that we're interested in is whatever it is that they've invented.
Right.
We want to know what the company is doing,
Yeah.
and we want to know what their business objectives are, and then we can help add value by protecting the innovations that they have, if we can.
Yeah.
But we might not be able to add that much value, and that's what we're really trying to assess, is how do we get that, you know, get the most out of that IP as an asset. Yeah.
You hit a chord with me right there, and I just want to, if you guys are okay.
Did I
with it,
offend you?
No.
Okay,
I
good.
just,
all right.
let me preach for a minute.
Okay.
Maybe just,
all right.
This is like, you know, kind of goes back to my days as a lawyer, and then now in the finance world. I think, and this kind of goes, it's a long way of answering this question, but it really kind of hones in, I think, on a really important topic that we're talking about today, and kind of the overarching topic here is the value of IP, and you know, is there, you know, value to patenting, essentially, right? So, I mean, in my experience, I think you want to get going and you want to start as early as possible, whether you're a startup or whether you're a mature, you know, middle of the road company, or whether you're an older kind of legacy company. Get going as soon as possible. And the reason I say that, not because of anything having to do with kind of the wonky patent side, or, you know, the patent side of things, is more about business. And what I've seen in representing clients as a lawyer, and also on the finance side at Fortress, is we, and when I say we all in this room, and also kind of, I'm preaching more broadly, generally in society, need to kind of normalize the idea of protecting intellectual property. And it shouldn't just be a conversation that's going on between lawyers and people in the lab and engineers, which has traditionally been the case. And the clients that I saw when I was a lawyer that kind of were above the curve were ones where this conversation was going on in the boardroom. It was a normalization of intellectual property within, you know, on the balance sheet, conversations with CFOs, conversations with CEOs, and the companies that I saw kind of lagging behind, both in, you know, just kind of their evolution of their business, and also, to be frank, just kind of the protecting their business from a litigation point of view, because that was the world I lived in before this.
Yes.
Is those companies that were getting dinged on patent cases were kind of in the boardroom weren't as mature in terms of having these conversations about IP. What does it mean? What's our strategy, right? And
Well, what's
and now
the
in my
easiest-
life, now I see this time and time again, and it's disappointing when you see companies that will, they'll send you a pitch deck, and the patent page is, maybe a half page, sometimes a full page, but usually a half page. You got to go beyond that, and that usually, I believe, starts in the boardroom. Yeah.
Yes.
Go ahead.
Yeah, and well, you brought up the point of, I just think one thing that I think regularly is how if we have a client that is going to enforce IP and there's a potential infringer that has a lot of IP or one that does not,
Yep.
it's an easy decision for
Right.
us, right? Every
Right.
time, right? To go after the company that does not have IP, right?
Yep.
You have nothing to, I think, an
Nothing to shoot
important
back.
point. Yeah,
Yeah.
exactly. And I think that something that gets lost a lot for companies too is like, I've got this patent, it protects me.
Maybe. Yeah.
Maybe,
Yeah.
right? Protects you from what, right? That's the thing, because that's how we really think of patents. It might help to protect from people from, favorable litigation, meaning that I know that if I sue you, that you're not going to be able to countersue right away, at least with patents, right? Where companies that have a portfolio and you're operating in the same industry, there's an argument that you could, countersue that person as soon as that's done.
Right.
And it just makes you a lot less easy target.
Yeah.
Less easy target for what could be for them doing strategic M&A as well, right? So like that's how
Exactly.
a lot of clients will approach their strategic M&A. There'll be other, regional entities or things like that within their market that do not have portfolios, and they can leverage theirs to drive down the price of what they'll have to pay for those entities.
Yeah.
Based on whatever that infringement profile is. Yeah.
Great.
So anyway, yeah, creating that value early,
Yeah.
certainly important. But
Yeah.
I just try to, and it's, I always say I try to only give advice that I give to my mom, right? By the way, I don't know if my mom is watching. Mom, if you're watching, happy birthday.
Oh.
I love you so much. I think that she was watching and I forgot about her. So Mom, happy birthday. I love you. Hopefully I'll get to see you soon. Okay.
That was nice.
She's an outstanding person. So we only want to give advice that we think makes sense. And the trouble with startups in particular is that you have $10, but you need to spend $50. Mm-hmm. And how is it that we distribute those things? If we don't sell anything, then we're not going to get the things in the door so that we can make the Fortresses or the Aons of the world happy, so that we have some sort of revenue, so that we can get some money.
Right.
Or if we're getting equity money, we're never going to hit our targets if we don't spend the money on this, or we've got to show a certain level of EBITDA growth if we want to get this sort of exit.
Yeah.
Right? And we need to be able to, if we spend $1 with Caldwell, or we spend $1 with whoever it is, we need to ensure that we're going to get like this 10x multiple out of it somehow, right? And there, we understand those challenges, right? And so I think that it's just what I was trying to get at earlier is that there's, for some business models, it just doesn't make sense to have this, everything is case by case, because sometimes you don't need to file a ton from day one, right? To qualify for debt. It just might not make sense because you might not get the debt anyways until you get 500,000 people on your weird app that you made.
Right.
But until that happens, right? But for others, and I would say for most, that it's going to be some measured strategy that you have from the get-go. And probably my guess is, and this is my personal experience, is that when people approach it, and like whenever we put our decks in a diligence room for whoever the funder is, right? And those are generally pretty comprehensive and have more than just one slide, right? Like we're talking about the breadth of what it is that they have. We're looking at who the competitors are, where it is that those competitors hold particular, looking where they hold their IP within the technology areas of the industry, and how, kind of telling the whole picture of the good, the bad, and the ugly all in one thing, rather than just throwing it, these are our assets and it's really important. Those overtures will fall on deaf ears. It needs to be something that you can look at and go, okay, now we can have a real discussion because we know everything about what's happening in the industry.
Right.
And we know what's going to have predictive value, and we know we know what monetary value is associated with what you've already created because we can see it on your balance sheet.
Right.
And that's where you're really talking about tying those things together and maturing those things to, that's where people are getting the most exit value.
Yeah.
Right?
Now he's preaching.
Yeah. Well, there's fortunately for me, I don't even need to sell these things, right? Because it's, like there was, like a recent white paper that was out, and there's multiples even just this year, just based on data available from Crunchbase or from Pitch Deck, where I think Pitch Deck was saying that there was companies that do a PE exit that have patents are exiting at 148% more exit value than typically. Or if you're doing it with companies IPO at a 5 times higher rate than what you would if you didn't have patents. And then a very similar story is told with VC money or debt money. Those things, the amount of access that you have to be able to utilize those business tools will be much greater for companies that have patents. And I see that time and time again, but the approach matters.
Right.
You can't just be a revenueless company that has 300 patents and expect everything to fall in place. It needs to be a balanced approach and work with people that you trust. I think that's the key. And if you find the right teams, to mesh together, then hopefully you'll have great success. There's another great question here. It says, could you please give a case study or two, a success story, and what not to do? Thanks, Gabriel from Lund, Sweden. I love the specifics of that. Thanks, Gabriel.
A success story, and then what was the other question? What not to do?
Just give a case study. Yeah, exactly. What's a success story?
Yeah.
What does one look like? And then what is something not to do? And I think that
I can give a couple success
I would give
stories.
maybe a couple success stories, because I think if you give one, it could be one that's a very mature company and that's an easy deal to do. But I think maybe the startups are more interested in that sort of what works for those guys, because that's always the harder needle to thread. But it's certainly possible as well.
And these are success stories that are public, so I can talk about them, but there are lots of other ones that are not public and don't ever hit the press. But thankfully these are, and it's kind of exciting. So the first one is we did a deal with a company called Asia, based in the Bay Area in the U.S. And by the way, these are not UK specific. I can give some examples of Europe deals, but these are kind of the ones that I think pop into my head because A, they're public and I can talk about them, and B, they're just really, I think, exciting and fun. Asia was a company that basically has technology that helped connectivity between computers and the internet, right? And that's a really dumbed down version of what their technology is, and I'm not doing it any kind of service. But back in, I think 2015, 2016, they were doing quite well, and they decided to expand their business into some other countries that didn't go so well. And they started, kind of suffering for that. And they had, I think, they were at a loss of about 16 million at the time that we started talking to them. It was mainly, if not exclusively, because of this decision to go elsewhere with their business, and they were not getting paid for that. And so their business was suffering. And they were really in dire straits, and we got introduced to them. We ended up giving them a $16 million loan, partly because of some of the revenue history that they had, and their executives were very sophisticated. And that's also one of the things that we look at. We look at the team, we look at the business, and we look at the patents. And they had a fairly substantial, nice patent portfolio. And the rest is history. I guess the success story is we gave them a loan based on their IP. If they didn't have that IP that was protecting their business, that would have been a much riskier proposition for us. But we were able to give that loan. They took the money, they built more product, R&D, hired more people, grew, and got out of their problems, and now are a successful business. The second one, that's kind of an easy one. The second one, I think, is really cool, especially maybe for the startup folks, because this is kind of the dream, right, for some of the startups, is we partnered with a company called SmartView. They're an IoT company back when IoT really wasn't something that a lot of people talked about. People talk about it a lot now, but back then, not so much. I can't remember how big their patent portfolio was, but it was big, substantial enough that fast forward after we gave them, I think it was a $30 million loan, based, again, because they had products that covered their product, or they had patents that covered their product, as well as revenue. They were able to grow their company to a point where they were an acquisition target and got acquired by Johnson Controls, which I think operates in the UK. It's also the company operates in the US. They were looking to fill a gap in one of their businesses, acquired SmartView for a nice sum, and everybody kind of went off and had a great day. And it was, I think, at least they'd say, it was primarily because of the loan we gave them essentially saved that company from going down, and they were able to then build and grow and then be acquired. And I think that's kind of the dream of the startup, right?
Yeah.
So that's, yeah.
That's a great example.
Yeah.
What not to do. I mean, there's just so many examples of that. That one's a hard,
Yeah.
that's a hard, maybe it's better to say, what is a waste of your time? You know, what's maybe, I guess you can't really give a firm example,
Yeah.
but you could.
This is easier said than done, but I think a waste of, I would say be honest with yourself about your patent portfolio. And before you can be honest, you obviously have to be aware and educated about what you have. And so that's the first step. But a lot of times we see a lot of situations where I think, you know, we will get a phone call and people will say, you know, we invented the internet or something, right? And it's just not reality. So I think be honest and be realistic about what you have and what you don't have. That goes a long way with funders and financiers, I think, is, you know, be transparent, be honest about what you have, because you can lose credibility pretty quickly.
Yeah, and if you're unable to accurately communicate what it is that you have, whether it's about your IP or your business, one is either that you're overselling and someone can see right through it, myself included, or that you have no idea what it is that you're doing, and both of those scenarios aren't good, right? So it's just easier to just tell the story, tell the good, the bad, and the ugly, and then you can at the very least, get some good advice to get you where you need to go. Yeah.
I think when you're dealing with IP folks, typically, I don't know if this is really, at least for us, it's the case that you're dealing with a lot of lawyers who can kind of see through the bullshit, right? Yeah. So, and so the sooner,
because we live it every day,
the sooner you can get to a point where you can have a very, you know, honest business conversation, the better. Anyway, I'm repeating myself, but yeah.
Yeah, please. Yeah. Can you use the? I think we have some microphones actually. I want you guys. This is it doesn't sound in here, but it's for the folks on the live stream. Yeah, thanks. Yeah.
So, you know, one of the things that I've engaged 3 startups with Keegan's firm is to get a couple of basic kind of overarching patents in place at a sort of seed stage kind of. You know, of the development of that those companies, right?
Yep.
So there seems to be a bit, you know, it's quite tricky, because then the next stage is you're going to go for maybe not even this Series A, you know, before a Series A, another raise.
Yep.
And most investors at that stage want to invest in growth, not necessarily in patents.
Right.
So you're kind of prioritizing the growth. You want to get to some kind of profitability, and patents tend to get pushed to the back of the cupboard, because they're kind of fairly intangible at that stage, but really important. I get the importance of doing it, and it's a little bit of a frustration. So, you know, do companies like yours ever consider lending money to fund the patent strategy?
Absolutely.
So that you can get to that particular point?
Absolutely. I mean, part of, you know, we had the question before about what the uses can be for the funds. Certainly with our the deals that we do, part of the funds can be used for sure for patent prosecution costs. Absolutely. And
But I guess,
in fact,
I think part of
we
the question,
encourage that.
though,
But yet, is that not the question?
I think that he's asking,
Yeah.
will you give debt so that people can get the patents, so that they can do the
just
IP debt?
strictly for the patent prosecution?
Yeah, because
Yeah.
I'm saying that, when you go for
Yeah.
investment, generally
Yeah.
that's funding your growth of your business, not necessarily the
Right.
patent development at that point.
Right.
So, we've invested a reasonable amount of money at the start just to get these overarching patents.
Patents is
Confused
fine.
now talking to
I'm gonna start
Americans
saying
in
that
the UK. And there just seems to be a bit of a gap there where
Right.
it becomes quite tricky. And
The
then,
chicken or the egg?
yeah, it is. Yeah. And I don't see anyone trying to solve that problem.
Unfortunately, I think the answer is a tough one. It's that probably would be a harder deal for us to do. I mean, we wouldn't just strictly fund patent prosecution and that's it. Yeah.
But it is
Yeah.
worth noting, though,
Yeah.
that some funds won't be, there's some debt deals that folks won't want a lot of those funds to be used for further patent prosecution and procurement, and
Right.
there'll be others that will be very much supportive of it.
Yeah.
So, and folks that are kind of in between as well.
Yeah.
I mean, what you're saying is you need, roughly, let's call it 25, because that's the number you mentioned earlier.
Sure. Yeah.
And that's probably close to $1 million, slightly less in pounds, not much nowadays. And, for a startup, that's a fair chunk of cash, really.
Yeah. That's a big climb. Yep.
Yep. It depends how you approach it, too. I mean,
Yeah.
it's...
Well, I think
It
so.
depends
so
at
for-
what stage you're at as a company,
Yeah.
too, right? So,
Yeah.
like, for instance, if we have a company that comes to us that is an established, a company that's been around that has revenue or something like that, but they've just never gotten patents, then they can file 25 right away under an accelerated filing program
Right.
and be able to use those for debt funding within a year to 18 months.
Right.
As soon as they begin to have some of those allowances, right? So then I would say that it's about half as much money as that, and then you're looking around like the $500,000, £500,000 mark, right?
Right.
And then they're able to leverage that to get access to capital. But I think it more strongly points out, though, that everything has to be kind of strategic. And I think that for companies that are just getting started, sometimes it is just about getting that stake in the ground and then trying to figure out the ways that you can get equity money in the door,
Right.
to be able to get the growth, to get the revenue, to get the debt that you want to be able to get. But I wouldn't know because I've never done any of those things.
I'm impatient.
I'm just an outside observer, exactly.
Yeah. Yep.
Chris, where do Fortress raise your money? Is it institutional money, or how do you raise your funds?
Yeah. How do we? It's good question. That's beyond my pay grade, really. But I can generally tell you, institutional money. We've got family offices. We raise money from all over the place. That's a lot of different investors. Yeah.
Come and pick on you later then.
Yeah.
Is that in well, I guess, because you guys are completely private again.
Right.
But Fortress was the first publicly traded
Right.
fund.
Yep. Before my time there, but yeah.
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 Yeah. Yeah.
So, hi, thank you so much. I hope you can hear me through this. I just had a quick question, just because what you were saying about the geographic portfolio, you said you wanted it to be as broad as possible.
Yeah.
I was wondering, because obviously in Europe right now, obviously UK, Europe right now with their patent prosecution, and obviously with the Europe having the unitary patents just obviously coming through now, people are starting to do that. I was wondering, in terms of you guys looking at patent applications and stuff, would that make any difference in terms of what you're kind of looking for, how people have basically gotten their patents? Would you want it to be through the prior application, or would you like the unitary patent? Does that make any difference to you guys in terms of financing?
And just so I understand, does it make any difference? Are you talking where the filing is?
Yes,
or-
what it is that, sorry, I work with a lot of startups and such, and they're looking right now at doing UK and Europe, but a lot of them are
Right.
saying is it going to make any difference for me in the future in terms of financing if I've gone through the unitary patent system in terms of getting my patent prosecution, or is it that should I go through the old system of going through Europe and then
local-
validating in different...
Going through the national,
Yeah.
National
stage
system.
first. Yeah,
Yeah.
exactly. Yeah. I think she's saying like PCT or.
Yeah.
or
Yeah.
Does it make any difference for you guys, or are you okay?
Boy, that's a really good question. Did you want to go first, or do you want me to?
No,
it's a question for
I
me.
think
Yeah.
that's
Yeah.
a question for you. Is it in? Yeah, I can jump on too.
Geez, it's a tough one. Maybe I would ask the litigators in the room, right, Chris?
Yeah, go ahead.
Yeah.
Yeah, that's
Yeah,
a good, yeah.
It's something that I get asked quite a lot.
Yeah, it's a great question. Yeah.
I would just say, as long as the patent application is still open,
Open.
the portfolio is open,
Right.
you can still explore that.
Yeah.
Yeah.
So the bigger question is whether the portfolio is still live,
Right.
and
Yeah.
you can develop the portfolio. That would be my view.
Sure.
Yeah.
And I do think the trick is though, and this is important because you're saying that you're working mostly with startups, right?
Yeah.
Is that what I would ask myself, and this is the answer to the question actually, is what is the fastest path for me to file to have an allowed patent application, right? Because if you do, these guys, we can't just go to Fortress and say, hey, I got 20 patent applications,
Right.
right? But I can go and probably say I got